Welcome. Ladies and gentlemen, friends, before I go ahead with the discussion with respect to the business income, let me give you the basic overview understanding of how exactly this particular classes is going to work for you and how exactly you got to surf around through these particular classes and understand this. First of all, friends, I have given you different books. I call them as book number F01, F0. That way I've just numbered them only for the sake of simplicity. Okay. Now this book that you see here, this is basically your book F01, which consists of all these questions, some barrack provisions, MCQs and all this. I mean, this is a very exhaustive book. I call it as a book F01 in your material. Okay. So you have given a book called as a book F01, F02, F03, F04. Okay, let me tell you what is the difference between all these books and how these particular books has to be accessed and understood. Okay, book F01 contains your question bank, plus it contains your MCQs, plus it contains some of the selected provisions of the barrack. I repeat, some of the selected provisions of the barrack. Friends, let me tell you that it is very important that any tax laws that you study, you should refer it through the barrack. I mean, it is my strong advice to you. Okay. The reason being that the MCQs, which is basically going to be a very handsome amount of the portion, when they go into the utmost depth of any particular topic, provisions, explanations, etc., then this barrack understanding is going to help you like anything. So I expect you that you purchase one barrack from the market. However, the selected barrack provision, I repeat, the selected, I have not given you the entire copy of the barrack in my material. I have given only the selected provisions of the barrack, which I think that's more important from the examination point of view, and they are already given to you in this particular material. Okay. Now, book number F02 is basically your study notes. Okay, what is your study notes? Study notes is basically the understanding of the same to same barrack provision, but it is in the simplified manner. That means it is just like our understanding, not in that technical language of the barrack, but in the simplified version of that particular notes. I call it as a study notes. Okay. Book F03 is basically all case laws. Okay. So it is like topic wise, subtopic wise, case laws have been discussed and explained in your book number F03, which again, I'm going to anyway explain to you in our regular class by itself. Book number 4 is an exclusive book which consists of question bank with respect to MCQs. So it is like your lot of MCQs to practice. That is your book F04. Okay. Now, friends, what is the difference between MCQ here in book F01 and this particular MCQ? Okay. This book F01 MCQs are basically the simplified ones. I mean, what I would rather say, it is like your 1 mark types. Okay, and these MCQs are a bit more advanced level or a bit more deeper MCQs where maybe certain calculations also etc. may be required, and that is the difference. Okay, now friends, you as a student, you should go through this particular book F01 very importantly. This book should be very handy with you. Book number F02, you may or may not take a print, or you may not have that particular hard copy of book number F02, because the content of book 02 is anyway included in your book 01, but it is in some better wording, some more technical wordings or something like that, which I'm anyway going to explain to you. So this, you need not take a hard copy. Case laws, friends, I'm anyway going to explain to you in my regular classes. So there is no need to go to the depth of that particular case law and read, because it is very in-depth material on account of the case laws. So this is also, you need not take a print. You can just keep it handy and you can just use the soft copy reference or something like that. These MCQs again for your self-practice. Now this particular MCQ, if you want, you can take a print, but however, they are simplified MCQs. On the screen also you can study, so the choice is yours. Okay. So what I'm trying to tell you is that book F01, this particular book, okay, is the heart of everything, and that particular book should always be very handy with you for our classwork. Okay. Moreover, friends, for maybe 2-3 months before the examination, I call it as LMR. Okay, it is one separate material altogether. That particular material, friends, I call it as a last minute revision material, in which there is a summary of amendments, a summary of points that you should see it at the last moment, in which it contains summary of case laws, summary of some of the provisions, etc., etc. Okay, this is pure your revision material, which normally I publish it at least 2-3 months before the examination. And it is very much advisable, friends, that you go with this particular barrette and keep this particular barrette very, very handy with you. Now, friends, in my material, now for example, see, this is our material. Okay, so this is your book F01. Now, this particular chapter, which is your, for example, business income chapter, which I'm going to start with in just some time to go, because it's a bigger chapter, I've divided into the smaller parts. Okay, so I will call them as part A, part B, part C, or part AA, part AB, part AC, etc., where different concepts are to be explained and understood, and questions based on that are to be solved separately. So that is divided and subdivided. Okay, these part numbers are also given to you in your header everywhere. Okay, so each time when I go to a particular question, friends, I need not tell you that come to this particular page and all that. This is your part number and this is your page number. Okay, so this is how you can access this particular material from your end. Okay, however, as per my habit, I'll keep on telling you that come to this particular part and this particular chapter. Okay, and they are all ID numbers. Okay, so don't think that this is always going to be in a sequential manner or something like that. Now, for example, this is your question. Okay, question. Now this is the question ID number. Okay, so I will identify, friends, every question with respect to the question ID numbers. Okay, and these ID numbers are not the serial numbers. So nowhere, friends, things are going to be like 1 2 3 4 something like that, because they are all identity numbers. They are all ID numbers which I have for my internal purpose basically. So we are going to identify every question with the help of the ID number which is given with respect to each and every question. Okay, below every part, for example, this is your part AA. If I just scroll it down, I have also given you the barrette copy. Okay, 1 second, and I have sometimes, friends, you'll have to little bit excuse me because it's a very big material, and sometimes I have to do a good amount of scrolling or something like that. Okay, so this is your barrette provisions. I already told you, friends, that these are selected provisions on account of barrette. Okay, so this is your chapter ID number. Okay, and now for the barrette provision, the page numbering will be restarted. Okay, so that will be, so basically you identify with the chapter ID number. Okay, now this is your barrette provisions, which I will use it for the purpose of explanation and everywhere. Now, friends, one thing which I want to tell you, that in the barrette provisions, I've already done this kind of highlighting and marking and all that at the respective places. Okay, so it is almost in all the chapters as far as possible. This highlighting I've already done it, so that these things is going to help you directly in terms of MCQs. Okay, so most of these highlighted points, basically, friends, they are all your MCQ material as far as possible. So it is not possible for anybody to have the exhaustive list of the MCQs from the examination point of view. Thousands and thousands of MCQs can be developed. So there is no possibility that anybody can give you exhaustive list. So you got to have this hardcore basic understanding. And with that basic understanding, we are going to use this particular material even in our regular study, so that you get those technical words in your mind, and even your MCQ aspects is going to get very, very clear in the due course of time. Okay, so this is a barrette provision with all the highlights. For example, I've used this particular section, which is this one. Okay, this is your section number 28, which is basically the charging section of your business income. And accordingly, I have, as I already told you, friends, that I have given you what should I say, selected provisions and not all the provisions from the barrette. Now, friends, let me start with the discussion with respect to the business income. Friends, before I go ahead with the business income, let me tell you that this particular chapter of business income is going to be pretty valuable because like many other chapters like assessment of entities, corporate taxation, assessment of firms, AOPs, etc. At all these places, friends, the concepts of business income will come into picture. Now, for example, if a company is doing business, then business income provisions, of course, will come into picture. If a firm is doing business, then business income chapter will come into picture. So that way, friends, this is like a common chapter which will be used in many more other chapters. And so this particular chapter is pretty valuable and important from the examination point of view. Now, friends, in the business income, which is one of your head of income, ultimately what you want is your income under the head business and profession. Okay, so ultimately friends, what you want is, listen very carefully, that for example, if you think that this is your books of accounts and this is your profit and loss account. Okay, so you have your gross incomes, say for example 100, you have your expenses, say for example 40. Okay, you have some other expenses, administrative expenses, say for example 31, and thereafter you have profit as per profit and loss, which is your balancing figure. Okay, so that is going to be your 29. Okay, very simple example. Now friends, under the head business and profession, we want the same profit and loss. In other words, what we want is basically to arrive at this amount of taxable profit, which is under the head of business and profession. So what we want to do is basically the same thing. Like you imagine in the books of accounts, you take income on the credit side, expense on the debit side, and you get a net profit. But we don't do it in this particular manner. I mean, what we do is, or what we have to understand from the law point of view is that this particular income, it should be income as per the provisions of the Income Tax Act. So I will just convert that particular words and I will say that it should be income, but it should be income as per the provisions of the law. Similarly, friends, even the expenditure should be as per the provisions of the law. In other words, there are many provisions which say that this particular expenditure will not be allowed as a deduction. Cash expenditures are not allowed if it is exceeding some limit. Related party transactions are there. So there are quite a good number of adjustments under the tax laws where it tell you that the expenditure will be allowed to you where the conditions of the law are satisfied. Okay, so say for example, I'll take up a very simple kind of example. Supposing out of this particular expense, amount of 2 is supposing disallowed. Okay, so let us assume that for the sake of presentation, that amount of 2 out of this particular 40 has been disallowed. So you can do computation. You can do computation of business income. For example, you can say income, okay, 100. So what is as per the books? I assume that it is as per the law. Expenditure which will be allowed under the Income Tax Act is going to be only 38 because 2 is not allowed. Okay. Other expense, let us assume that it is fully allowed, that is 31. Okay. So expenditure allowed for the purpose of income tax is going to become 69. Okay, and our income, which is business income, it is going to be difference, that is 31. This is one way of understanding. Okay, so the presentation of the answer from the tax law point of view, from the law point of view, it is what I call it as a simple straightforward method, that income minus expenditure. So what is income as per the law, expenditure allowed as per the law, and the difference is your income under the head business and profession. Okay, the alternative way is of presenting the same to same answer. You start profit as per P&L. Okay, so you start whatever is given to you as printed in the question, which is this particular number, that is your profit as per profit and loss. Okay, and whatever is disallowed, you add it to that particular figure and arrive at the taxable income, and that is 31. Okay, so whichever way you are comfortable, you can solve. Whichever way in real life also you are comfortable, you can do. There is nothing wrong. Ultimately, the net income, which is taxable income, that particular figure, friends, should come out very properly. Okay. Now, for all practical purposes, let me tell you, for all practical purposes, and even from the examination point of view, the best method to be followed is this particular method. This is the best possible and best method which is to be followed. So most of the question, we will start with profit as per P&L, do add less adjustments, and arrive at ultimately a business income. However, some questions, friends, may not give you or may not have sufficient data. For example, profit as per P&L, this particular number, for example, may not be given to you in the examination condition at all. For example, so that doesn't mean that, oh my God, you're not going to solve the question. So then you'll have to follow this particular method of presenting the answer, arrive at income minus expenditure, but everything should be as per the provisions of the law, and accordingly get the amount of the business income. Okay, so wherever it is possible, we will follow this particular method. Start with profit as per P&L, do the add less adjustments, and all the adjustments, friends, I'm going to explain it to you in a much more greater depth, and arrive at the amount of profit, which is, I call it as a taxable profit, that is your business income. Now, friends, come to this particular page, your business income, part AA, question ID number 48. And let me read the question first of all, and thereafter I will discuss. Mr. Kalpesh Sanghvi, a retail trader of Cochin, gives the following trading and profit and loss account for the year ending 31st March of the previous year. Particulars: opening stock, purchases gross profit, credit side sales, income from UTI, by other business receipts, and by closing stock. Debit of P&L to salary, rent and rates, interest on loan, depreciation, printing and stationery, postage and telegram, loss on sale of shares, that is short term, other general expenses, net profit. Credit side is gross profit brought down. Additional information. It was found some stocks were omitted to be included in both opening and closing stock, the values of which were opening stock 9,000 and the closing stock 18,000. Salary includes 10,000 paid to his brother, which is unreasonable to the extent of rupees 2,000. The whole amount of printing and stationery was paid in cash. Depreciation provided in profit and loss account rupees 1,05,000 was based on the following information. Written down value of the plant and machinery is 4,20,000. A new plant falling under the same block of depreciation, that is 15%, was bought on 1/7 of the previous year for 70,000. Two old plants were sold on 1/10 of the previous year for rupees 50,000. 5. Rent and rates includes GST liability of 3,400 paid on 7th of April of the assessment year. B. Amount paid to Indian Railways for the use of its assets, 2,000 paid on 10th of April of the assessment year. 6. Other business receipts include 2,200 recovery of excess expense paid on account of printing and stationery to Shyam Stationery and Company 12 years back. Other general expense include 2,000 paid as donation to a public charitable trust. 8. Assessee has incurred expenditure relating to exempt incomes and the same was charged to personal account and not debited to profit and loss account. 9. There was an earthquake in Nepal, so local person of his locality was collecting old household items to be forwarded to Nepal to help the victims. In that regards, one of his customer paid him 10,000 and requested him to buy kids' garments and then forwarded to Mr. Shyam, who was in turn providing honorary services to help the victims of earthquake. 10. Other business receipts. Other business receipts include non-compete charges 300, damages received from Zolo Limited for making changes in terms of agency contract rupees 35, sundry creditors written off 230, incentive from Zolo Limited for achieving the sales target 100, loss from trading in Nifty derivatives rupees 150, STT is paid, loss from trading in commodities derivatives rupees 100, STT is not paid, recovery of bad debts from Mr. A 50, sales were effected 10 years back, receipt from his followers rupees 75 out of his activity of teaching and preaching of Jainism. Further, the sundry creditors written off will be income as per section. Your options A, B, C, D. These are your MCQs. A, B, C, D. Section, that is 36, 41, 44, 28. B. Advance received from debtor, if it is written off, will be income as per the provisions of 36, 41, 44. It is not taxable income of the assessee. 3. The bad debts recovered will be income of the assessee as per section 41, 36, 44. It is not taxable income of the assessee. Next, assessee in the question can opt for presumptive scheme under section 44 AE, ADA, 44M, none of the above. Mr. Amit, brother of Kalpesh Sanghvi, his GST liability for the previous year 1819 and 1920 is rupees 60 and 40 lakhs respectively. The payment of 100 lakhs was made to the government on 1/5/21. As per section 43B, deduction will be allowed in previous year 21-22 60, deduction will be allowed in previous year 21-22 40, deduction allowed in 21-22 100, and 43B deduction will be allowed in 21-22 amount is nil. MCQ, in the MCQ number 5 above, as per 43B, deduction allowed in previous year 1920 will be 60, previous year 1920 will be 100, previous year 1920 will be nil, previous year 1920 will be 40. It shall be safe to assume that law of all the years are the same as per the previous year. You are required to compute his business income and answer the independent MCQs. Advise whether he can offer his business income to tax as per the presumptive scheme. Go through the question, friends, and thereafter I will start the discussion. I'm giving you about 1 or 2 minutes time. Just go ahead, read the question, and thereafter I will start the discussion. One thing, friend, which I want to be very clear, particularly because of the MCQ kind of situation, which is nowadays going to be very prone in the examination condition, your hardcore basics, friends, has to be very, very clear. Very, very clear. So I will always suggest you, friends, use the Barrett provision maximum. You should have the Barrett handy with you. However, the selected Barrett provision, I have already given it to you. Again, I have already given it to you in the highlighted manner also, so that it becomes very easy to read and understand and kind of situation. So don't miss out, friends, on account of the Barrett. Okay. Now, friends, let me start with the discussion. See, this is the question where there is one gentleman called as Mr. Kalpesh Sangvi, retail trader of coaching, gives the following data. Now, in this particular question, friends, it is already given to you. Profit and loss statement only straight away has been given to you. So we can start with this particular figure. Listen very carefully. So how do I start my answer? Particularly that I start with my net profit itself. To this, I will do all the headless adjustments, and I'm going to get my taxable business income. This is the basic method and manner in which the answer will be solved in this particular category. Okay. Now, because it is initial questions of the business income at the advanced level, I am going to go into much more greater depth of each and every provisions, as simple as that. Okay. Now, first of all, friends, if you look at this particular question, it has got full-fledged trading profit and loss, and all the data has been given to you, plus the additional information has also been given to you. Okay. So, first of all, let us try to understand that how this particular profit exactly goes about in terms of computation. Okay. Now, if you think about income minus expense, I mean, just thinking about, it is ultimately your business income. Listen very carefully. These expenditure, friends, there are a lot of provisions in the business income chapter. For income also there are a lot of provisions, no doubt about that. But for expense also there are a lot of provisions. If you want to categorize this particular expenditure broadly, you can categorize into 3 types. 1, 30 to 36, section 30 to 36. This is a specific set of sections which tell you that these items of the expenditure will be allowed, specifically it will be allowed as a reduction. Okay. Section 37(1) is, or maybe section 37 you can say, it is one general provision, or maybe you can say other deductions where it is not specifically provided under section 30 to 36. Okay. And section 38 to 43B are the specific disallowances. They are the specific disallowances, and they will tell you that in this situation, following expenditure will not be allowed to as a deduction. For example, cash expenses beyond a limit is not allowed as a deduction. That will come in the category of section 38 to 43B. Now, for example, I'll just take up one very simple thing for your better understanding. Supposing if you say salary, okay, salary 60,000. And if you have to think, maybe that is this particular salary allowed as a deduction or not? Okay, so you can always look into whether it is specifically allowed in 30 to 36, just the imagination, or it is covered by other deduction of section 37(1). Okay, or is there any disallowance provision with respect to that? So this is how you have to keep on thinking. Okay, now I am telling you first of all section 37(1) in a very, very simple way, which is what should I say, other deduction of the expenditure which is to be considered. And before I go ahead, I want to bring to your notice few of the Barrett provision, and you can come to this particular page first of all of the Barrett. Okay, so this is your part ID number. okay, which you can just use it, and I've given you the direct provision. Now friends, if you come to these particular provisions, section 28, which is the charging section of this particular business income chapter, opens with the words, it says that following income tax under the head profits and gains of business and profession. Okay, it says that any profits and gains out of the business and profession any time during the previous year. There are so many friends court cases on this. The courts have said, if you say that this is profits and gains, the law refers to, section 28 refers to profits and gains. This particular profits and gains basically indicates it is income minus the expenses. It indicates income minus the expenses. In other words, what is taxed under the head business income is a net profit basically, but of course it should be as per the provisions of the law. That means income as per the law, expenditure as per the law. Basically it's a net income which should be subject matter of taxation. In other words, in any case the gross income is not subjected to any taxation. Okay, so this is one of the hardcore basics which I want to bring it to your notice. Then friends, first of all, let me take you to section 37.1. One second. And of course, I'll have to keep on scrolling because hardcore basic things I want to first of all bring it to your notice. And I'll keep on doing that, friends. And as I already told you, friends, you should have the barrack with you handy. The way I have done the marking, you should also do the marking in your barrack provisions. Or you can take a copy of this particular material also, which is there in my particular book number F01. Now section 37.1, friends, this is a general purpose. I repeat, this is a general purpose deduction. In other words, just now, just the imagination, the salary paid to the staff. Now, if you see that salary paid to the staff will never be covered by section 3236. You will not have any specific entry of allowance with respect to salary, for example. So, those kind of situations will come under section 37.1. And section 37.1 says, basically, look, any expenditure which is expended, that means what you have spent wholly and exclusively for the purpose of business and profession, it shall be allowed as a deduction. I repeat, wholly and exclusively, which is expended for the purpose of business and profession, it should be allowed as a deduction. Very simple one. So here, friends, now all your general items, your general administrative expenses, your salary, your other administrative expenditure, which is specifically not provided under section 3236, will come in this particular category. So this is one concept. In fact, friends, section 37.1 is a concept. It says that if it is wholly and exclusively for the business purpose, it should be allowed as a deduction. However, there is a caveat, and the caveat is that it should not be covered by section 3236. Because 3236 is, what should I say, specifically allowed a list of expenditure for the purpose of computing the business income. So it should not be covered under 3236, okay, and not being any capital expenditure. Okay, so if it is a capital expenditure, it will not be allowed. And it should not be specifically covered by section 3236. I'll give you one very simple example. Because it is initial part, I will do everything into much more greater than, but when we go deeper, then I will not keep on repeating the same things again and again. Okay. Now, for example, 3236. Okay. Interest on capital borrowed. Example, I'm just saying. Now, interest on capital borrowed is specifically covered by section 36, subject to the provisions therein. So, if you say that interest on capital borrowed, it is allowed to the assessee as a deduction under section 36. So, that is not covered by section 37. Simple as that. However, if you think about salary to staff, now salary to staff is not covered by section 3236 because there is no specific provisions in that regard. That will come under section 37. These concepts can help you in solving the MCQs. Okay. Now, let me tell you, friends, first of all, there is one type of MCQs, and that also I will keep on telling you. What is that one type of MCQ? Let me just tell you. One type of MCQ is straight away going to ask you that what is the section number which is relevant for this? As I told you, friends, that MCQs, there can be huge list. I'm telling you, it can be infinite MCQs which can be developed when it comes to the tax laws. However, you have to understand the concept only. And what is one type of MCQ? One type of MCQ is that some facts will be given to you, and you will be asked, "Mamma mia, you tell me that this particular treatment will be done under which particular section number?" My God, the entire act is open. The entire act they can pick up, and from any corner of the law they can make an MCQ. See, I'm not trying to scare you, but what I'm trying to tell you that you be vigilant, and that be the reason, have the hardcore basic understanding very, very clear in your back memory. Okay, so looking at this, first section 28, keep it in mind, it's a fundamental concept of profits and gains, and section 37.1, which is general deduction, which is wholly and exclusively for the purpose of business and profession. However, 30 to 36 items are not allowed because they are specific provisions, and capital expenditures are not allowed. Capital expenditures are not allowed because naturally capital expenditure you got to capitalize, and that cannot be allowed as a business expenses. Now friends, let me go back to the question. Okay, so this is our hardcore basic understanding with respect to every question where all this basic data has been given. So whatever is a specific provision, that we will follow. Now, see how exactly I'm going to open up my answer. Okay, let me open up my answer first of all. This is my question ID number 48. Okay. Profit as per P&L, which is already given to me, that is 50,000. Add less adjustments. Okay. First of all, I will go through all the adjustments 1, 2, 3, 4, 5, whatever. So I'll just number them. Add less adjustments. So adjustment number 1. And then adjustment number 2, etc. Whatever the way it keeps coming in. Okay, so I will first of all try to solve all the adjustments which is given to me in the question. Okay, so and once I do all these adjustments, thereafter friends, I will have to go through the entire credit side. Then I have to scan whether all the credit items are properly taken, not taken. Then I have to go through all the debit items, and thereafter only I can conclude my answer that this is my net business income subject matter of taxation. Okay, now additional information. It was found that the stocks were omitted both in the opening and the closing stocks, the values of which were 9,000 and the closing stock was 18,000. Now you have to do these particular adjustments, opening and closing stock, which was omitted. That means you have to increase the closing stock by 18,000 because it was already omitted, and you will have to also increase the opening stock by the amount of 9,000. Okay, why do you want to do that? Keep this in mind. Keep this in your mind that you want profits and gains, and profits and gains has to be computed as per the method of accounting. Method of accounting which is permitted under the business income chapter is either cash or it is a mercantile method of accounting. That is also provided under section 145, which says that the income, business income or income under the other sources can either be computed by cash method of accounting or mercantile method of accounting. Now in this particular question, nothing of cash method of accounting has been given to us, so you have to go with the mercantile method of accounting. So basically you have to arrive at the fair figure of the profit and loss as per the mercantile method. So you have to adjust whatever was omitted. Now you have to bring it onto that particular records. Friends, section 145 also I want to bring it to your notice, but these provisions of 145 I have given it to you in this particular chapter ID number. Okay, now let me tell you friends, because I'm using this particular barrack material for my explanation purpose, now I might have to again go through some different chapters altogether, because the barrack provisions, the section may be printed in some different chapter. So maybe that this copy of this particular section is, I have given it to you in a different chapter, but wherever it is relevant, I will just use it. So this kind of combined interpretation of the law, I'll have to keep on doing it because that's where the law is. Okay, baby. Now, so section 145. Okay, this is your hardcore basics of method of accounting. Okay, section 145 says that The income which is chargeable under the head profits and gains, business profession, or income from other sources, that is IFOS. That means these two heads of income, one is business income, other is IFOS, okay, can be computed either by cash method of accounting, okay, either by cash method of accounting or by mercantile system of accounting, which should be regularly employed by the assessee. In other words, there is a choice of method of accounting, but it has to be regularly employed. Is that clear? And the choice is only for two heads of income, that is your business income and that is your other sources. For example, your salary income, house property income, and the capital gains head. These three heads of income do not have any relevance. I repeat, baby, do not have any relevance. I repeat, baby, do not have any relevance whatsoever with respect to the method of accounting. Okay, so we are going to follow this mercantile method of accounting, and in that I have to give all the effect to what was already omitted and kind of situation further. The government may also notify from time to time ICDS, income computation, and the disclosure standards to be followed by the class of the assessee or classes of income. So it's a very natural thing. So wherever ICDS, that is your income computation and the disclosure standards, come into picture, that wherever it comes, we are also going to apply it in due course of time. Okay, so this was one of the section 145 is also quite relevant. So here, opening stock and closing stock. Okay, so I'll have to give the effect. The closing stock which was omitted, so I'll have to increase. So 18,000 rupees is going to increase my income because that much of closing stock is going to increase, and to the extent of the opening stock, my income is going to decrease because that is going to be my increase in terms of costs for the computation. So I'll do my adjustment number 1, baby. Okay, so wherever the spacing is required. Okay, inventory adjustment. Okay, closing stock, opening stock. Closing stock is going to increase my income and opening stock is going to decrease my income. This is how, friends, I will have to keep on updating my answer, solve all the points and go ahead with my answer. Okay, so that is what I've already done with this particular adjustment. Okay, now adjustment number 2, salary includes 10,000 paid to his brother, that means a related party transaction, which is unreasonable to the extent of rupees 2,000. So any related party transaction, friends, which is excessive or it is unreasonable will be disallowed under section 40A. Now, how much is unreasonable here? That is given to me to the extent of 2,000. So that particular amount will be straight away added. So let me update my answer. It's a pretty simple one. Related party excessive or unreasonable. So to that extent, income will be added. Next adjustment. However, friends, because we are in the initial part of the business income, I should never forget to take you to the barrack provisions, which basically tell you that why and where, because you should know the justification front for everything. Okay, so section 48(2). 1 second, let me scroll, baby. I'll have to keep on scrolling. And I've already told you, friends, I repeat again that I've already given you only the selected barrack provisions. Okay, you can come to this particular section 40, capital A. Okay, subclause 2. So this is the numbering. Okay, where assessee incurs any expenditure That's the basic language where the payment has been made to the persons referred to in clause B. This is basically a related party. Basically, it is defined in particular clause B that these are all list of related party. Like for example, for individual, his relatives, company, the directors, firm, the partners, kind of situation. So that particular definition is there. Okay, where assessing officer is of the opinion that this is excessive or unreasonable. So amount. Now let me tell you one more thing, that if, for example, if the expenditure is not excessive or if it is not unreasonable, that means, say for example, I have a transaction with my wife, but I am paying her reasonable money. For example, I employ her, supposing if she's working in my office, and for that I give a reasonable remuneration. The remuneration which I give to someone else is the same remuneration I give it to my wife. Okay, so what's wrong? So law says if it is not excessive or if it is not unreasonable, okay, then the law will accept it. But if it is excessive or if it is unreasonable, then the excess figure will have to be disallowed. So excessive, unreasonable, considering the fair market value of the goods or services as the case may be. Is that clear? Okay. How much of the expenditure is considered excessive or unreasonable? So how much is considered as excessive? So only the excess element will not be allowed, shall not be allowed as a deduction. Absolutely clear? Okay. Now, let me go. Yeah. Okay. So that was already excessive to the tune of 2000 and I have already done that particular adjustment. Okay. Let's go to the next point. It was a very simple point. Adjustment number 3. The whole of the printing and stationery was paid in cash. Okay. Where is printing and stationery? Let me find out. The printing and stationery is 23,200 and this is the entire amount as told to me in the question, that it is paid in cash. Now friends, with respect to the cash transactions, government is very sensitive. Government says that if it is any cash expenditure which is in excess of rupees 10,000 will be disallowed. That means it will not be allowed as a deduction. But the language of the law is not like the cash expenditure, not like that. The law basically says like otherwise than by banking channel. That means logically, even if it is a bearer check, the bearer check you will feel that, oh, it's through the banking channel, but again that will come in the scans and even bearer checks will not be. So don't just catch up this particular word cash. Let us understand the technical, logical meaning cash is very much correct. Okay. But the technical meaning is otherwise than by the banking transactions. Okay. But again there, the little bit of extra understanding is required. Okay. So here the amount is 23,200. Okay. And let me go to that particular provisions. Okay. Cash expense. This particular expenditure will not be allowed as a deduction. So it says that no deduction shall be allowed. That is one of the points. That means this is a kind of a disallowance. Okay. But understand the language of the law very precisely. Where assessee incurs any expenditure, in respect of which the payment is made, aggregate payment or the payments made to a person in a day, So it is a per day aggregation to be done. For example, if you are having some purchase, for example, in the same day from the same person, 8,000 in the morning and 7,000 in the evening, total is 15,000. So you have to consider the figure here is per day. I repeat, per day. Okay. Otherwise than by. Now this is the language which should be very, very clearly in your mind. It should be otherwise than by account pay check. Keep this in mind. Account pay check. So if there is a bearer check transaction, that will also be like a cash transaction only. Even if it is a cross check transaction, it will be like a bearer check, or let me like a cash transaction only. In other words, the disallowance will come for even a cross check, even a bearer check, and of course even the cash transactions. Okay, so otherwise then by account pay check, don't forget this. Okay, or account pay bank draft, or the use of electronic clearing systems. That means if you are transferring money through your NEFT, RTGS, that is your account to account transfer, because that is accepted by the law. Then there is nothing wrong. So if it is by electronic clearing systems through a bank account, so there is no problem. So that is, but it should be through a bank account. Okay, exceeds 10,000, exceeds 10,000 rupees. That's the limit. Okay, then no deduction shall be allowed to the assessee. Now, in the question, friends, listen very carefully. In the question, this data is exactly not given to us. Listen very carefully. Because this is, listen very carefully, this is 23,200. This is PNL given. No, so that is for the entire year. So it is not given to me in the question whether it is per day and whether it is to the same person. Look at this question data. The whole of the amount of printing stationery, so it was expenditure item, was paid in cash. Agreed. But there can be a possibility, listen very carefully, there was maybe 500 or 1000 rupees transaction or multiple transactions during the year. If such was the case, I cannot disallow. Because my limit, which is 10,000 rupees limit, which is provided under section 40, is per day limit, and that precise data is not given to me in the question. Have you got this, baby? All right, so here we have to write that clear-cut note, so depending upon that particular situation. But because I want you guys to understand and explain the spirit of the question, I will disallow. I'll say that because it is fully paid in cash, and so maybe I will assume it is full payment and it was one payment and that was to one person. So I'll just disallow. Okay, so I'll just say cash expense. Okay, that is, or if you want to write, assume it is full payment in a particular day, amount is 23,200. I'll just add it. You could also assume it other way around, there is nothing wrong. But basically I wanted you guys to understand this particular adjustment. Okay. Okay, next part. The depreciation provided. The depreciation provided in the profit and loss account is 1,05,000. Where is that in the profit and loss? Let me check. Here it is. Depreciation 1,05,000. Okay. 1,05,000 was based on the following information. Okay. Now, with respect to the depreciation, friends, income tax has got a block of asset system. So generally, friends, with respect to the depreciation, always your book depreciation will be add and the tax depreciation will be less. Generally, it will always be like that because tax depreciation is on the block of asset. The basics I've already taught you in my book A as such basically. However, we'll do the calculation of the depreciation as per the provisions of the Income Tax Act, which is as per the block. Okay. So, let me do that particular tax calculation. Written down value base, so this is 4,20,000. So your opening WDV is going to be 4,20,000. The plant falling under the same block of depreciation 15% on 1st of July of the previous year is 70,000. I'll have to add that particular thing. Because it is in the 1st of July, it has already been used in excess of 180 days, because then we have the concept of half rate depreciation and full rate depreciation. But because it is already in the month of July, That means 180 days test is already complied with. So it is going to be eligible for full rate depreciation. Okay, so this will be eligible. And the 2 old plants were sold on 1 October of the previous year, 50,000. So whatever was the sale of old plant will have to get adjusted in terms of the block. That's a block system. That means it's a group of asset, and I have to add it to that particular group, and sale price I have to deduct it. Okay, and on the WDV I'll have to calculate the depreciation. So pretty simple calculations. So here book depreciation will be add, that is your 1,05,000. Tax depreciation will be less, but let me do that inline working note. Opening WDV was 4,20,000. Additions, now these additions are eligible for the full rate, but I am not writing that all these things into the greater depth here because that's not very much required. Add 70,000. During the year, some of the assets were sold into this particular block, that was 50,000. So your WDV is 4,40,000. That is as per the definition. Okay, and depreciation will be at the rate of 15%. That is already given to me in the question. So that come to 66,000. So tax depreciation will be less. 66,000 rupees will be less. So this is going to be my adjustment. Book depreciation add and the tax depreciation less. Next point. You also, friends, keep on updating your answer together with me. Come on. Rent and rates include the GST liability, which was paid on 7th of April, basically in the next year after the previous year. Amount paid to the Indian Railways for the use of its assets paid on 10th of April. Okay. Now friends, section 43B. Section 43B comes into picture where it says that certain deductions will be allowed to you only upon the payment basis. That means you pay it and you get it. As simple as that. So during the year only you make the payment. During the year you have the liability. If you paid during the year, you get the deduction or you don't get the deduction. Okay. So first point is, say for example, previous year, next year. Okay. You incur the liability in the previous year. This is a year of liability and this is the year only you have already paid. So that's a very fair, simple, plain vanilla kind of situation. Okay. The second situation is that the liability is of the previous year, but you have paid it before the due date of furnishing of the return of income. That is also permitted under section 43B. So if your liability of the previous, now for example your March month payment, you have made it in the month of April, it will also be eligible for the purpose of deduction. Okay, but only when you paid. If you haven't paid it, you don't get the deduction. That means certain deductions are to be allowed only upon the payment basis. Okay. Now here we have a GST liability. One example, an Indian paid amount paid to the Indian Railways for the use of its assets. Let me take you to that particular provisions. First of all, section 43B. Hardcore basics I want you all guys to keep on understanding. Let me scroll and come on, I will have to scroll, baby. Lot of barrack provisions, darling. Come on. Okay, here we are. Section 43B. We need to understand first of all a technical opening of this particular section. So notwithstanding anything contained in any other provisions of this particular act. Notwithstanding, I repeat, baby, notwithstanding anything contained in any other provisions of this particular act, that means this particular clause has got an overriding effect. Okay, so this is like even beyond your ICDS. So these particular items which are covered by this particular section will be allowed to you only upon the payment basis, notwithstanding anything contained under any other provisions of the law. Now, so these are all your list of, this is all your list of transactions. One second. Okay. Now, here it says it shall be allowed. Okay. Only in the previous year in which such sum is actually paid by him. I repeat, it shall be allowed in the previous year in which such sum is actually paid by him. Simple. So if you have actually paid, you will get the deduction. That's the hardcore basics of this particular section. Is that clear? This payment is irrespective of the previous year in which the liability to pay the sum was incurred by the assessee as per the method of accounting. That means irrespective of, I repeat, irrespective of the year in which you incurred the liability as per your method of accounting, you will get the deduction of the list of the expenditures only in the year in which it is actually paid by him. Is that clear? So, the first thing that we need to understand is that you will get the deduction in the year of payment. That's the message. Okay. Now, the second part. If you make the payment before the due date, I repeat, if you make the payment before the due date of furnishing of the return of income, so that could be allowed during the, that means I call it as logically the extended time limit. I repeat, logically I call it as the extended time limit. Okay, so that is here, provided that nothing contained in this particular section shall apply in relation to any sum which is actually paid by the assessee on or before the due date of filing of return of income. So you should have paid. So it was a damn simple example, baby. Now it was a payment of month of March. You made it in the month of April. So naturally it is before the due date of the filing of return of it is before the due date of the filing of return of income. No doubt about that. There is one more extra caveat together with that, and it says that the evidence of such payment is furnished by the assessee along with such return. So basically the document, for example, you are paying the GST, so you have to prove the documentary evidence, okay, that you already paid that particular sum before the due date of the furnishing of the return of income, and accordingly you will get it. Okay, now, so this is the list. In our question we have one GST, and we had some payment to the Indian Railways for the use of the railway assets. Okay, so one of the point is here, payable by the assessee to the Indian Railways for the use of the railway assets. So that is one of the specified transaction here in this particular section. And any sum payable by way of tax, duty or cess. So GST is a tax. It is tax, duty or a cess. Okay, I repeat, tax, duty or cess, by whatever name called. So GST will come in this particular category. Let's go to the question, baby, now. Question. Okay, so GST is paid before the due date. Amount paid to Indian Railways for the use of its asset, that is also paid before the due date. So that is, both of them is okay, and that is already included in your rent and rates. So where is your profit and loss? Already gone here. This is your rent and rates. Okay, so This already includes, so it is already debited to the P&L, so there is no question of any disallowance, and it is already allowable because it is already paid before the due dates. Come on. So, next particular point number 5, okay, no disallowance, GST, and to Indian Railway, 43B, paid before the due date. Paid before the due date, okay. So, no question of any disallowance because it is anyway debited to the profit and loss account. Come on, next point. And because it is initial question, friends, I'm going to do it into much more greater depth, but the same to same things, friends, I will not keep on repeating in each and every question. So, baby, you better pay proper attention, okay. Now, the next point in the question, point number 6. Okay. Point number 6, other business receipts. Other business receipts include 2,200, recovery of excess expense paid on account of printing and stationery to Shyam Stationery some 12 years back. So 2,200 rupees is already included in the other business receipts. Where is my other business receipts? Let me check. Okay, here we are. My other business receipts. This is my other business receipts which is already credited to the P&L, which already includes 2,200, which is basically recovery from the Shyam Stationery. Now, friends, understand there is one very hardcore fundamental concept of the tax law, and very simple, very beautiful, and you need to pay baby a little bit of extra attention. Okay. Recovery of the expenses, and this is rather to be understood as a concept rather than a particular transaction. Okay. For example, forget about this particular point, which is this point number 6 here. I am giving you a very simple example. Okay. Supposing you do purchases. So you do purchase account debit to your sundry creditors account credit, say for example 100 rupees transaction. Okay. You have already incurred some expenditure, and that particular expenditure is straight away allowed to you as a deduction. Okay. Now, against this, supposing if the creditors give you some discounts, for example, okay, creditors give you some discounts, simple, straightforward, plain vanilla kind of a transaction, baby. Okay. So what you will do? Okay. Sundry creditors account debit, and discount on creditors account credit, say for example 5 rupees. This much of discount has been provided. Okay. Now the doubt will come into picture whether this particular discount is your income taxable. The answer is 100% yes. 100% yes. Why? Because it is against the deduction of the past. That means there is a concept of the law. I repeat, there is a concept of the law that in any year, if you have got any deduction, expenditure, relief, benefit, whatever, while computing the income, that means this is your deduction in any of the earlier years, and against the deduction if there is any benefit, against the deduction of the past, by whatever means, whether it is in cash, whether it is in kind, whatever, this particular benefit or recovery will always be deemed to be your business income. In other words, section 41, which expressly makes this particular concept so vibrant that any deduction of the past, logically I am just trying to tell you, and against which if there is any recovery in any subsequent year, it will be allowed as a deduction. So in the earlier years allowed as a deduction, now it will be deemed to be your business income. So there should be some sort of a nexus, and that nexus has to be established. Now, for example, recovery of bad debts. That is also one of the example. Only the section number may change, but bad debts recovered is basically your income. Discount from creditors is your income. Sometimes you may even write off the creditors is already your income. They're all beauty examples of the incomes chargeable to tax. tax. Okay, now understand that particular provision first of all. First of all, let me just update my answer and thereafter I will take you to that particular barrack provisions first of all. Okay, so this is my point number 6 here. Business receipts are already including this and it is anyway taxable as my business income. So I will not have to do any adjustment because it is anyway included in my profit as per P&L. Okay, so first of all, let me update my answer, baby. Where is my answer gone? Okay. Recovery of expense is anyway income. So no adjustments are required because it is anyway included in the income. Okay. However, let me take you to the barrack provisions, section 41, and understand that particular section also as a concept only because it is a mind-blowing, beautiful concept given to us by the law. So, okay. Yeah, you can come to this particular page. Fine. Section 41 is your deemed income, basically, a concept of your deemed income. Okay. Where, understand the concept very clearly, where allowance or a deduction was made in an assessment year in respect of any loss, expenditure, or a trading liability. Any allowance or deduction was made in any assessment year for any loss, any expenditure, or any trading liability which is incurred by the assessee. So in any earlier years, I incurred any loss, any expenditure, or any trading liability. Okay. That is in the earlier years. You have to understand it as concept only. And in any of the subsequent years, that means subsequently, okay, the assessee has obtained, whether in cash or in any other manner, so logically in kind, any benefit in respect of such loss, expenditure, or such benefits, whether by means of a remission or a cessation of the liability. That means creditors written off. Creditors written off will be remission or cessation. That means a liability ceases to exist. That means a liability decreases. So, in any of the subsequent years, if you obtained anything in cash or in any other manner, logically you can say in kind. So, even if you obtain the benefits in kind, it will be covered by these particular provisions. Very, very natural things, baby. Okay. And this particular money will be chargeable to the income tax of the previous year of the assessee. This particular concept is also extended even to the successor of the business. This is also extended to the successor of the business. Now, say for example, if my business was a taken over business. So I took over business from someone and I had taken over assets, liabilities of someone else, and of that someone else which I have taken over, and again I have any recovery of this kind of benefits, again it will be deemed to be my business income. Okay. Further, the explanation also makes it very clear. I repeat, the explanation also makes it very clear that even if there is any cessation of a trading liability by a unilateral act, it will again be a deemed income. What do you mean by a unilateral act? Unilateral act means, see, the creditors written off. So you write off the creditors, but maybe the same creditor has not written off in his books of accounts. But normally what you write off, even that person has to write off. But supposing if it is not done like that, that means unilaterally, that means the transaction recorded is only in your books, for example. Then also it will be deemed to be your income chargeable to tax. Have you understood that? Okay. So let's go back to the question first of all now. Recovery of expense. Okay, so that I have already adjusted in my question. Okay, so recovery of expenditure is already done by applying the provisions of section 41. And mind well, These are hardcore basics. Wherever some deeper interpretation again required, I will do that. Don't worry. Okay, so this is hardcore basics. First of all, baby, I am bringing it to your notice. Okay. Further, the other general expense includes 2000 paid as a donation to the charitable trust. Now, as I already told you that section 37(1), it should be wholly exclusively for the business purpose. This is not business purpose. A business don't have the purpose to donate the money, and therefore this particular amount of 2000 rupees will go for the purpose of disallowance. Okay, so donations are not allowed. So I'm going to add back 2000. The next adjustment, assessee has incurred the expenditure relating to the exempt incomes. Now, expenditure in relation to the exempt incomes are also not specifically allowed as a deduction, because when the income by itself is not taxable, such expenditure will not be allowed to you as a deduction. Section 14A makes it very clear, very simple, basic understanding of that particular clause. So, expenditure relating to the exempt incomes are not allowed, but it is already charged to personal account and not debited to P&L. It is already not debited to the P&L. See, I will make the additions to the income only if it would have been debited to the P&L. That means it is not debited only. So anyway, what treatment that this question has done, or this particular paper setter has done, is a correct treatment. So I don't require any adjustment because it is not allowed as a reduction, and it is anyway not debited also to the profit and loss account. So let me straight away quickly go do that particular adjustment. Expense on the exempt income is anyway not allowed. Anyway, it is not debited. Okay. Next point. There was an earthquake in Nepal. So, local person of his locality was collecting old household items to be forwarded to Nepal to help the victims. In that regards, one of the customers paid him 10,000. So, actually what happened is that this particular gentleman, our assessee, has received 10,000. Okay. And it was requested that you buy the kids' garment and forward it to Mr. Shyam, because this Mr. Shyam is going to send this particular goods or this clothes to those victims of Nepal. Here, friends, the concept of accrual to be thought of. I mean, let's see, there is something called as a revenue recognition concepts, that these 10,000 rupees have actually come in the hands of my assessee, no doubt about that. But this money do not accrue to him. That means this particular money is not for the benefit of the assessee, and since it is not for the benefit of the assessee, I cannot say that these 10,000 rupees is assessee's income chargeable to tax. However, this particular 10,000 is nowhere either included in your P&L statement. See, if you see here in this particular P&L, if you notice here, you have sales, you have income from UTI, you have other business receipts, and you have closing stock and gross profit brought down. It is not stated in the question that this 10,000 rupees is included anywhere here, something of that sort. So logically, let us believe that the accounting what these guys have done is a proper accounting, and anyway, it is not included in the income. It is not even ought to have been included in the income. So it is not accrued to the assessee. You can say it does not belong to the assessee, and therefore it does not have any tax consequence. So maybe the money have been passed on through his pocket, but it do not accrue to the assessee. So let me go ahead now and okay. So help to earthquake victims. There is no accrual. So there is no question of any income coming into picture. Okay, let's go to the next point in the question quickly. Other business receipts include non-compete charges. Now friends, under section 28, the non-compete charges is anyway the income. See, what is a non-compete charge? The charges that you have received, and all these monies are already included in the other business receipts. Okay, so it is already included in that particular amount. So something which you get for not doing something. Okay, so for not doing something, that is basically your business. Again, whatever money that you get is always regarded as your business income and straight away chargeable to tax, and it is anyway included in the income, so I don't need to do any adjustment whatsoever. Damages received from Solo Limited for making changes in the terms of agency contract. So maybe he was a trader, so he has got some agency, and there are some modifications which were done to that particular contract for which you have received some damages, because this contract was but for the business. These damages will also be your business income chargeable to tax. It is anyway your income. It is anyway included in your other receipts. So I don't need to do any adjustments for this particular sum. Okay. Sundry creditors written off. Sometime back, what I already explained to you, section 41, sundry creditors written off is anyway a straightforward example of remission of trading liability, the benefits that you get out of the incurring of that particular liability. So it is anyway your income, it is anyway chargeable to tax. Okay, so this is also incentive from Solo Limited for achieving the sales target. The incentive is basically your benefits or perquisites. I repeat, it is basically your benefits or perquisites out of the carrying on of the business and profession. I repeat, out of the carrying on of the business and profession. This is also anyway the income of the assessee. Now, first of all, friends, let me take up this particular point. One second, friends, let me scroll a little bit. Yeah, look at the charging section. The charging section basically clarifies that these items of transaction or incomes will be anyway your business income. Okay, now listen very carefully. See, you already got any money with respect to the termination of the management or modification in the terms of the considerations thereof. Any termination or modification in terms of management. Okay, which is in connection with the management. Any connection with termination or modification of the terms and conditions also will be regarded as your business income. If you are holding any agency and if there is any income out of the agencies will also be regarded as your income. These are all basically types of income which is covered by the charging section. So that particular question tested all that particular knowledge. Okay. Further, if you get any benefits or perquisites out of the business, business incentive which was given, that is also a beautiful provision under the law here, and that is any benefit or a perquisite. I repeat, any benefit or any perquisites, whether in money or not in terms of money. That means whether it is in cash or whether it is in kind. I repeat, whether it is in cash or whether it is in kind, arising from the exercise of a profession. Basically, business or a profession. Okay. So any benefits or perquisites out of the carrying on of the business and profession, and there can be variety of examples here. One of the point is that incentive given to the dealer for the purpose of achieving sales can be covered by this particular point. In other words, anything that you do in the course of the business and you derive some benefits out of the business, we call it as benefits or perquisites, whether it is in cash or whether it is in kind, it will be regarded as your income chargeable to tax. Okay, so let me keep on updating my answer. Non-compete charges, no adjustment is required because it is anyway included in the income. So section 28, okay, damages for modification in the terms, also no adjustment required, covered by section 28. Okay, then it was creditors written off, also do not require any adjustment because it is anyway covered by section 41 income. Incentives also do not require any adjustment because it is covered by section 28, because it is anyway income and it is already included in your P&L. Basically, it is already included in your other business receipts. Okay, let me take this particular point forward now. Now, friends, come to the next point of the discussion, that is basically your loss from trading in Nifty derivatives. This amount, STT has already been paid, and loss from trading in commodity derivatives. Make a correction in the question, friends. It should not be STT, it should be CTT. Okay, CTT not paid. Friends, before I just go ahead, let me just tell you that first of all, this is a loss what has already been given to me. Particularly, friends, with respect to the speculative transaction, friends, one has to know that if there is any speculative business, the speculative business is always regarded as a separate and a distinct business. In other words, if there is one assessee who has got speculative business also and a non-speculative business also, then it has to be considered as a separate and a distinct business. At the same point in time, friends, what is to be regarded as a speculative business is also further defined under section 43.5, where under 43.5 basically it is said that this trading in derivatives where STT or CTT have already been paid will not be regarded as a speculative transaction. Basically, it's a fillip which has been given to the derivatives transactions. However, friends, particularly with respect to the commodities, some of the agri commodities, friends, government is not charging CTT. So the law has made it very clear that if there is any agri commodities on which the CTT is not payable because government is not imposing only that particular CTT, then the condition of CTT is not required. So in that case, anyway, it will not be regarded as a speculative transaction. That means any profit or loss therefrom will not be regarded as a speculative profit or speculative loss, as the case may be. Secondly, friends, if there is a speculative business and the speculative business is giving you a loss, that cannot be set off against normal business. However, this holds good, friends, only when it is a speculative business. If it is not a speculative business, then no question of any such segregation required to be done. Friends, in this particular context, two clauses that we need to note and understand. Very simple one. One is section 28 explanation, which basically clarifies that it is a separate and a distinct business, and then the definition and the general understanding of a speculative transaction. Okay, but before that, I will just update my answer. See, the Nifty trading in Nifty derivatives, okay, not a speculative transaction. That means I don't need to segregate because it is after all a loss. No, so anyway, it will be anyway eligible for the purpose of set off against my normal business. Okay, so no such special adjustment is required. However, commodities. Now, for the commodities, friends, in the question it is said that CTT has not been paid. So basically it should be agri commodities. Okay, so that is not clearly printed in the question that whether it is those commodities on which. So if you want, you can write an assumption there. Agri commodities. Okay, that is also derivative transaction. It will not be regarded as a speculative transaction. So no specific adjustments are required. Okay. However, let me take you to the barrack provisions also. Okay, and we are here, friends, in section 28. At section 28, the explanation. 1 second, let me scroll, baby. Okay, and here we are. The explanation in section 28, that is basically the charging section of your business income chapter. Any transaction which is carried out, which is in nature of a speculative transaction, shall be deemed to be a distinct and a separate from any other business whatsoever. I repeat, it shall be deemed to be distinct and separate from any other business whatsoever. So basically, a speculation business should be considered as a separate business. This is what the law is trying to tell us. Together with that, we also need to understand the definition of a speculative transaction. 1 second, friends, I'll have to scroll a little bit. And there, of course, what I told you about that Nifty and all that, that is okay. But we'll need to do little bit of extra understanding also. Okay, this is a section 43.5. Now understand first of all what is a speculative transaction in general. See, we have understood that these derivative transactions are not a speculative transaction. This is what we already understood. However, let me also explain to you the other basics of the speculative transaction. Now, speculative transaction, there is one concept, friends, which is given to us by the law. It says that concept of delivery. Okay. So, if there is any transaction which is ultimately settled, if there is any transaction, friends, if it is ultimately settled, otherwise then by the actual delivery or the transfer of the commodity or the scripts as the case may be. That means if there is ultimate settlement of any such purchase sale contracts, in that particular situation, if the delivery is not taken, that means that there is a real test which is provided by the law, the test of actual delivery. You should not forget this word, actual delivery. It's a very, very important word. Unless there is an actual delivery, or put it differently, if there is actual delivery, it is not a speculative transaction. And if it is settled otherwise than by actual delivery, it will be regarded as a speculative transaction. Okay. However, for the purpose of this particular clause, some of the transactions are not regarded as speculative transaction. So these are your transaction A, B, C, D, E and all that shall not, look at this, shall not be deemed to be a speculative transaction. Is that okay? So what the law has done, friends, the law has given you some list of transactions, and those list of transactions are not a speculative transaction. Okay. Now, first of all, I'll just straight away directly take you to our derivative transaction so that our question gets hardcore rooted into your mind. Okay. So just look at this. Point number D, first of all, eligible transaction of trading in derivatives. Okay. Where the security contracts is carried out in a recognized stock exchange. It has to be carried out in a recognized stock exchange. So basically, in the recognized stock exchange, there will be a CTT, logically. Okay, so this is how we should understand. So transaction of trading in derivatives in a recognized stock exchange shall not be deemed to be a speculative transaction. Okay. Second, the eligible transactions in respect of the commodities, derivatives, carried out in a recognized stock exchange, which is chargeable to the commodity transaction tax. Okay, so it should also be carried out in the recognized stock exchange, for which there should be a commodity transaction tax. So by default, friends, the law is telling you that commodity transaction tax should have been paid. Only then it will not be regarded as a speculative transaction. However, there is one special proviso which has been already inserted. We call it as a second proviso. Okay, it says that the requirement of chargeability of the commodity transaction tax, okay, this particular requirement shall not apply to the agri commodities, and that's a very logical thing also, friends, because the government is not charging commodity transaction tax on specified or eligible agri commodities, and that be the reason if government is not charging, why should there be a condition to pay the CTT on that particular front? Okay, so this requirement of chargeability of CTT shall not apply. Okay, it shall not apply. So ultimately, our question, let me just go back to, and thereafter I'll come back to it. Look at the answer. Nifty derivatives is not speculative, commodity is not speculative, and I have already assumed that in this particular question it is the agri commodities. The reason being that the question has already printed, no, that the CTT has not been paid. So it is better that we take the call like that, and only then it will not be regarded as speculative transactions. Okay. Now, the other part that we have practically, friend, our question is already clear. Okay. Other part. There are also some other transactions which will not be regarded as a speculative transaction. Actually, that is not part of our question right now, but because I'm already touching this particular point right now, let me clarify those particular points also. Okay. Point number A, where any such transaction of raw material, merchandise, etc., which is effected or settled to guard against the loss through the future price fluctuations. This is one of the very, what should I say, general and straightforward and simple understanding. For example, if I'm a corporate and if I have the raw material, etc. transactions, now sometimes international market, the price fluctuates up and down and I may cancel the contract. So if I cancel the contract, friends, there will not be actual delivery, because ultimate, friends, there is a test of actual delivery. Okay, so if I cancel that and if I settle that particular payment, you will feel that, oh, because actual delivery is not there, it will become speculative. But law protects you. Law says that now it will not be regarded as a speculative transaction, where it is to guard against loss through the future price fluctuation. Okay, any contract in respect of stocks and shares, where it is again to guard against the loss in holdings of stock out of the price fluctuations. That means if you are doing this transaction, that is without delivery, logically it is that way only, but your intention is to protect yourself against the price fluctuations, so those price fluctuations may harm you, and to protect that you have done this kind of a transaction, it will not be a speculative transaction. Okay, further, any contract which is entered into a forward market, okay, or a stock exchange in course of any transaction in nature of jobbing or arbitrage, again the same words, to guard against the loss which arise in the ordinary course of the business. This is everywhere these particular words come. To guard against, that means basically to protect the assessee himself against the future price fluctuations, it will not be regarded as a speculative transactions. So basically, those transactions which are settled otherwise than by delivery, and the intention of those particular transaction is to protect myself as an assessee against the price fluctuation, technically the losses, to guard against the price fluctuation, it will not be regarded as a speculative transactions. Now, recovery of bad debts. This recovery of bad debts is also covered by section 41, the same to same concept. Okay, so that is anywhere income. However, the sales was effected 10 years back. Now, this could confuse a student. Oh my God, that maybe 10 year back, 20 year back, the sales was done. Then the bad debts was claimed maybe so many years back. And today you are having a recovery of the bad debts. So maybe the recovery of the bad debts after many, many years. There can also be a possibility that the debt was in relation to my old business and today I'm doing some different business altogether. So all these situations, whether my old business should continue, not continue, all the situations are very simply handled by the law. Says that whether you have that old business, you don't have the old business, the recovery of the bad debts will be your deemed business income. So that is anyway your income chargeable to tax. Okay, let me show you that particular provisions also very quickly. And section 41, one second, let me scroll, baby. That is the deemed income. Okay, see, this is a section 41. So if you want, you can just see it here. This is your section 41. Okay, it is under your section 41. Under section 41, come to the subclause number recovery of the bad debts here. Okay, where any debt or a part thereof, that means recovery of the bad debts. That means in the past it was allowed to as a deduction, and now there is a recovery of the bad debts. It should be regarded as your deemed business income, correct? Whether the business or profession in respect of which the deduction was allowed in the past is in existence in that particular year or not. So maybe your debt was 20 years back. That time you were doing trading in textile products. Then you had some bad debts. You got the deduction. Thereafter you change the business. Now it's a new business. Now after many years you are recovering the old bad debts which was again in relation to the old business. Law takes care seamlessly all these particular provisions, and it says that whether it was into existence or not into the existence, it will be your deemed business income. Okay, so let me go back to the question. Okay, and one second, next page. That was your recovery of bad debts. Recovery of bad debts, no adjustment is required. Okay, so this is in continuation, point number 10. Then receipt from followers, very good point. Receipt from followers, 75 out of the activity of teaching and preaching of Jainism. Very beautiful point, friends. See, this particular gentleman, actually if you see, listen very carefully, as given to me in the question, this particular gentleman is a retail trader in Kochi. Okay. However, this particular gentleman's some side activity is there. This is what it seems actually. And that particular side activity is that he is teaching and preaching Jainism, some religious matter. Can we say that this money is to be regarded as his income chargeable to tax? So basically, he is a religious minded person and he has some followers who follow them religious thing, and they offer him some money, and this gentleman accept the money. Will that be regarded as his business income? The courts have said yes, this will be regarded as his vocational income. This will be regarded as his vocational income. In other words, the profession includes vocation. However, this particular gentleman is not per se a professional gentleman. He is a trader basically. But anyway, this is his real income, and the courts have always said that the real income will of course be chargeable to tax. And so, first of all, let me update my answer. I will say that vocational income, okay, and this particular vocational income is anyway, it is included in the particular figures, that is your business receipts, and therefore no particular adjustments are required. Actual adjustments are not required. And I will take you to that particular barrack provisions also, friends. Very simple one actually, where the definition of the word profession includes the vocation. And the courts have explained this particular vocation can take in its place in many different forms. Like for example, tailor, shoemaker, carpenter, where it is basically the ability of a person to do a particular job. And the courts have also said teaching and preaching, I repeat, teaching and preaching of the religious matter is of course a vocational activity, and if there is any income or receipts from your followers will again be regarded as, I repeat, will again be regarded as your vocational income, and it will be chargeable to tax. Okay, now so in this particular situation, I have to update my answer now. Okay, so 1 second, let me check. Have I updated my answer? Okay, so that is something what I have already updated. Okay, the further part is, I think all the adjustment I've already done. Yeah, all the adjustments I've already handled. Okay, now MCQs I will answer it separately, don't worry. And so now what I have to do is, since I've already taken care of all the adjustments, now I'll have to scan through all the items which are already debited, credited, already given to. So whatever I can see in the question, I'll see. Now credit side, sales is okay, that is no problem. Income from units is basically exempt income. It is just like dividend income. So this is exempt from tax. So I have to exclude this particular figure. Other business receipts I have already taken care of with a lot of adjustments, but it is anyway regarded as your business income. So let it go. Closing stock is anyway subjected to that particular adjustment which I have already done. So on the credit side is already done, and from that income from UTI will be excluded because it is my exempt income. Okay. So items credited to P&L, income from UTI is already exempt. The amount is 2,400. So that will go less. Next thing is items debited to P&L. Let me check. Opening stock is okay. Purchases is okay. Gross profit is just brought down. Salary is okay. Rent rates is okay. However, all the adjustments which were part of all these items I have already taken care of. Interest on loan is also okay. There is nothing wrong. Depreciation, that adjustment, book depreciation, add tax depreciation less was already done. Printing stationery was to be disallowed, that we have already done. Postage telegram is also, but for the business purpose. Okay, loss on sale of shares, that is our short term. Okay, so this particular item should be taken as income under the head capital gains. Okay, so I'll have to exclude it from the business income. So that is basically your head adjustment. Remove from the business income and take it under the head capital gains. But right now, friends, I'm just doing my business income computation. So I will exclude this particular from my business income. Okay, and other general expenses is again okay. It is but for the business purpose. So all the items have already been scanned. Okay, so loss on sale of shares, this is to be taken as capital gains. We'll have to add 8,100 rupees. Okay, all the items have already been scanned through. Just take the total. This is your business income. However, if you want, you can just take it as capital loss, but capital loss will again not be allowed as a set-off as per the set-off chapter. So anyway, I'm ignoring that particular point because right now I'm only computing the business income in this particular scenario. Now just use your calculator command, take the total of all the adjustments that we have already done. Okay. And check the total. 1,30,900. Just check the total, friends. Okay, so this was your full computation. Question like this can be 10 to 12 marks in the examination condition. Okay, so this is your business income. Or if you also want to make a comment, just make a comment. The capital loss will be carried forward. Okay, fair enough. Now let's go to the MCQs, which is also part and parcel of this particular question. Now friends, let me go ahead with the MCQs. Okay, the MCQs of this particular question that we have already got here. Let me come to this particular MCQ number 1. Okay, before I friends go ahead, let me tell you that wherever there is any section number which has little bit of extra importance, they can ask you that, oh, this particular adjustment will be done under what particular section. That can be one type of MCQ. Keep this in mind. So particularly now from the examination point of view, at least the broad remembering of section numbers. I'm not saying that you remember even all the subsection numbers, but at least broad remembering of section number can be tested in the MCQ. That is one of the possibility. Secondly, friends, wherever there is any limits, percentages, deductions, time limits, so all these things are very good MCQ material. So in every chapter you should know that if there are any time limits, by what time things can be done, what time things cannot be done, what are the fees which should be payable or if payable, and is there any specific percentage deduction, any monetary limits. All these things are very good MCQ material. Okay, so this can generate good amount of MCQs at the respective places. So you better remember all these things. Now, sundry creditors written off. Sundry creditors written off will be regarded as will be income as per the provisions of section sometime back that I have already explained it to you. So I'm once again not going into all the barrack provisions again and again. So sundry creditors written off is an income, no doubt about that first of all, and it will be income as per the provisions of section 41. So this is your answer quickly. Okay, and second, advance received from a debtor. Now this is one of the very good point. If it is written off, so advance received from a debtor, and if it is written off, it is basically going to go to the profit and loss credit side. Okay, so first of all, you have received just the advance money. So what you have actually, when you have got the advance money, actually you have not booked any expenditure. You just received advance money from a debtor. Okay, so if that is written off, if that is generally, it is going to go to the credit side of the P&L because it is written, basically your money which you have received has been written off. It will be an income first of all. So whether it is income or not, that is the first question that should always come into your back memory. And here friends, I want you all guys to understand one of the fundamental concept, because here the doubt will come into your mind whether it is taxable income of that particular assessee or not. Okay, because this is not something which is your expenditure written off. It is not something of that type, but it is advance money which is received from a debtor that has been written off. Okay, now friends, in that regards, one second, I'll just go to the barrack provisions, and I want one very good small little point first of all, because first of all you got to judge yourself whether it is an income or it is not an income. That is something that you need to understand first of all very precisely. Okay, and that is, one second, let me scroll. Okay, here I am, section 41. Understand this very carefully. Your deemed business income, where any allowance or the deduction which was made. See, our example is advance received from a debtor which was written off. So when there is any advance written off from the debtors which was originally received from the debtors, for which there may not be any allowance or there may not be any deductions. It was a pure balance sheet item. Now, for example, your bank account debit to the debtor's account credit, this was your transaction. There is no allowance, there is no deduction for this particular transaction per se. And that is going to create a confusion. That if this particular debtors, the advance money which you have received is been written off, say for example, will it give rise to any deemed income under this particular provision? Have you understood that? Okay. However, further, any allowance or deduction has been made in respect of any loss, expenditure, or a trading liability. Now here the main point is this trading liability. Okay. And in the subsequent year, if there is any remission or a cessation of a trading liability, where there is any remission or a cessation of such trading liability, that means you have a liability, that is a business liability, which cease. Remission or cessation means it ceases. The courts have taken the view, I repeat, the courts have taken the view, any trading liability, that means some liabilities which are basically not your capital liability, that means it is not something which you have borrowed for the purpose of acquisition of a capital asset. So all those situations, which is your ordinary business transaction, I repeat, this is how we have to look at it. We don't have to look at it like this, the journal entry which I'm trying to explain. This is only for your understanding purpose, but you don't have to look at it like that. What you have to understand that the trading liability means any, I repeat, any business liability. That means ordinary business liability, ordinary business transactions. If there is any remission or a cessation, that means if it ceases, that means now you had a liability before, now you have no liability to pay. For any reason, it will be regarded as your deemed business income. Okay. So, if you have to answer this, first of all, let me go to that particular MCQ. Advance received from a debtor, that's a situation. You could have thought of that it is not a taxable income, but that will not be correct if you do like that. Okay. So, if somebody would have thought like that, it would be a mistake. Okay. Now, it will be a deemed income as per the provisions of section 41. Is that very much clear? Okay. So, that's a choice here. So, update your second MCQ. That was a very good in terms of concept. Point number 3 of the MCQ, bad debts recovered will be deemed to be income of the assessee as per the section number. The bad debts recovery is also again, it is your section 41 only. So this is your answer. Okay. Point number 4, assess in the question can opt for a presumptive scheme. Now, presumptive taxation is there under section 44 AD, AE, AF, etc. However, for the trading business, it is 44 AD provision. But here, we do not have that 44 AD option only. Oh my God. So, I'll have to say none of the above. So, this is none of the above as my answer. Okay, because actually the answer is 44 AD. He could opt for that particular presumptive taxation scheme. Okay, so yes, but here the answer will be none of the above. Point number 5. In this MCQ number 5, friends, little bit of extra attention will be required, and that is your Mr. Amit, the brother of Mr. Kalpesh Sanghvi, has a GST liability for previous year 1819, 1920 at 60/40. The payment of 100 lakhs was made to the government on 1/5/21. Okay, so previous year 1819. 1920, the liability is 60 and 40. It has been paid on 1/5/21, that means previous year 21/22. This is the entire payment of 100 which has been made. Okay. Normally, friends, as per section 43B, you will get the deduction entirely in the year of payment only. That means year in which you pay, irrespective of the year in which you have incurred the liability, you will be eligible for the purpose of deduction. However, if it was paid before the due date of the furnishing of the return of the respective year, then it could have been allowed as a deduction in that particular previous year. Okay. So now, in the given situation, friends, it is a total liability of 100 paid on previous year on 1/5/21. That means previous year 21/22. Okay. So normally, friends, it should be allowed as a deduction in previous year 21/22. However, if it was paid in the extended time, that means before the due date of the furnishing of the return of the respective year, then in that particular previous year is allowed. So the due date of the respective year, have you paid it? So supposing previous year 1819, have you paid it before the due date of that particular year? No. So that means in that particular year, you will not get the deduction. For previous year 1920, have you paid it before the due date of previous year 1920? No, because previous year 1920, somewhere in 20, depending upon your due date, say for example, July of that particular 2020 is going to be your deadline for the purpose of filing the return. Basically, the due date as per section 139(1). Okay, so that particular, you have not paid it before the due date. That means you will not get the deduction in that particular year. That means you will get the deduction entirely in the year of payment, year in which you paid. So you have paid it in previous year 21/22, that is your 1/5/21. So as per section 43B, the deduction will be allowed in the previous year 21/22 100. So this is your answer. Okay. However, in MCQ number 5, the deduction allowed in previous year 1920 will be how much? Of course, it will be nil. Okay. The reason being that you haven't paid 1920 payment before the due date of 1920. And that's the reason you are not going to get any deduction for the previous year 1920. So your answer is going to be C, that in the MCQ number 5, you will be eligible for deduction for previous year 1920. Amount will be nil because you haven't paid any money by the due date of 1920. Simple as that. Okay. Further. So that's all done with your MCQs. Now you are required to compute his business income. We have already done. Answer the respective MCQs that we have already done. Advise whether he can offer his business income to tax as per the presumptive basis. Yes. See, the presumptive taxation in detail, friends, I will explain it to you a little later because I have one separate part of business income altogether for the presumptive taxation. But yes, he can apply and he can go for basically the presumptive taxation as per section 44 AD is a possibility. Now, if he goes for the presumptive taxation, the computation could be done like that. Listen very carefully. So you are just going to advise him that yes, he can opt for the presumptive scheme Okay, so in the presumptive scheme, friends, there is if it is a banking turnover, that means if you have received the money through the banking channel, all that, then the percentage is 6%, the presumptive tax, otherwise it is 8%. That exact data is not already been given to us. So what we can do is, his gross business receipts are 12 lakhs 11,500 and his other business receipts are 6,100. You can take the total multiplied with 8%. Okay, and this can be your presumptive income. So they are just asked one advice that whether you can go for it. Yes, you can go for this particular sum as your presumptive income. It can be offered. There is nothing wrong. Okay, here one of the point that the turnover, this is what I was just trying to bring it to your notice. Okay, that if you are multiplying your turnover with respect to your business receipts, so you have to have your this figure, of course subjected to presumptive taxation, but your other business receipts will also come in that particular category. Okay, so the main message here is that your business turnover, this is how you have to keep it in your back memory, normally should be subjected to the presumptive taxation, and in this particular category, yes, the presumptive taxation can be applicable. However, we are not going into like what should I say, some more greater details, like there could be some different thinking, some different provisions with respect to, because your other business incomes includes all this trading in derivatives and all that. So for that, this also includes all that and all that, so this could create a little bit of extra thought of and complications with respect to the presumptive taxation, but we are not going into that particular technical details right now. We are keeping this particular answer as simple, and yes, he can go for the presumptive taxation. So you could categorize all these derivative transactions separately, could be, or because you don't know what is the volume of that particular thing and all that kind of things. So we are not complicating the issue right now. We are just saying that yes, you can go for the because they've just asked for a simple advice. Yes, you can go for the presumptive taxation, and if at all you go for the presumptive taxation, you will compute your income accordingly. This is how the computation could be carried out. Okay.